Do you think this is the start of the long-awaited breakout for silver?
Well, it very well could be, Ernest. That fundamental news that you just mentioned about the increased demand, that's kind of been in the marketplace for some time. It's nothing new. What is new is the apparent Federal Reserve pivot, or the end of the tightening cycle, and that's gotten into the gold and silver markets. Silver is a poor man's gold, so to speak. It's cheaper to purchase. So we're seeing prices. In fact, we hit a 2-month high in silver late this week, and the technicals have turned bullish for silver, suggesting more price upside in the near term.
Jim Wyckoff is a renowned Kitco analyst who spends a significant part of the day producing detailed analyses for gold, silver, other precious metals, and other asset classes, including currencies and equities. Following the latest strong rebound in the precious metals market, which saw gold rise from $1,913 on July 10th to $1,962 3 days later, Jim is predicting further upsides for both gold and silver in the near term. For the latter, Jim says the technicals have turned bullish and that we can now expect more price upsides in the near term. During a recent interview with Kitco News, the renowned analyst lays bare his outlook and price predictions for the leading precious metals, crude oil, and the United States economy. According to Jim, the U.S. economy might still be able to pull off a soft landing and avoid a full-blown recession if the Federal Reserve ends its tightening cycle as soon as Jim is predicting. For Jim, the risks of the U.S. economy slipping into a recession are becoming less severe by the minute. He believes that even if the economy does slip into a recession, it would be a mild one that would not have a severe impact on the markets. With the risk of a recession almost non-existent, according to Jim, this means more strong rebounds and price upsides for gold, silver, and other precious metals and commodities. To support his claims about the current state of the U.S. economy, Jim cites various inflation metrics, most of which came out better than expected in June. For example, the Labor Department recently reported that the Consumer Price Index rose 3% on an annual basis in June, down from 4% in May, a 2-year low and 12th consecutive monthly decline. Jim believes the latest rebound in gold and silver prices means investors are getting ready for a Fed pivot, a likely outcome if inflation drops further, hitting the Fed's 2% target. According to the analyst, we can look forward to only 1 or 2 tiny rate hikes before the Fed finally pulls the brakes and reverses some of its stricter monetary policies. During his interview, Jim also discusses the upcoming BRICS meeting and how the introduction of a gold-backed currency might threaten the dollar's dominance on the international stage. We will now bring you clips from Jim's interview with Kitco News. Please watch, share, and like this video. Also, ensure you subscribe to the channel, turn on the notifications bell, and don't forget to drop your comments and observations in the comments section below. Thanks for the support and enjoy the video.
Just recently, Ernest, we've had a couple of very upbeat, tamer U.S. inflation reports in the Producer Price Index on Thursday, the Consumer Price Index on Wednesday, that really pivoted the gold and silver markets because there is a sense now that the Federal Reserve may be nearer the end of its monetary policy tightening cycle because inflation appears to be under control and in a downward trajectory.
Are you buying the possibility of a soft landing for the U.S. economy overall?
Well, it looks more and more likely. In fact, this has been the most broadly forecast economic recession that's never happened. And it appears that we are going to be able to navigate the economy, the U.S. economy, through this without any serious damage. And even if there is maybe a mild recession, that's all it's going to be is mild, but the jury's still out on that. And it appears right now that we are going to come in for a soft landing for the U.S. economy in the coming months. We've seen a solid rebound in the gold market and a strong rebound in the silver market. This pivot is based upon notions that the Fed is probably going to raise U.S. interest rates by 1/4 point at its late July meeting, but then may pause or even stop, depending on the new information on inflation in the U.S. economy that comes out in the coming weeks. But right now, there's a growing notion in the marketplace that there may be only 1 or 2 more small Fed rate hikes before this tightening cycle's over. That's good for the U.S. economy. That's good for the world economy. It suggests better demand for raw commodities. It has pressured the U.S. dollar index. And as those who follow the gold and silver markets closely know, the dollar index and the metals tend to trade in opposite directions on any given day. So the fact that the U.S. dollar index has just hit a 2-month low, that's good news for the commodity market bulls. Safe haven bid that we saw based upon a weakening global economy, that kind of left the marketplace some time ago. The marketplace now is focused more keenly on better economic growth worldwide in the major economies, producing better demand for gold and silver. Now, the one caveat I will throw in is that we got some weak import and export data coming out of China just recently that suggests the Chinese economy is still, struggling to grow. So we'll have to watch that closely. But as we speak, the marketplace mood is upbeat about some stronger U.S. and global economic growth in the coming weeks and months. Well, remember, Ernest, that commodity markets are highly cyclical, and we just in the past several weeks or few months, we've seen a down cycle in silver. We're starting to see that turn. So it's not going to be surprising at all to veteran market watchers to see those cycles kind of reverse course and see some price uptrends in place in the raw commodity market. Now, you want to watch crude oil very closely. Crude oil has started to rebound. This week hit a 2-month high. If crude oil resumes its downward path, that's going to be an ominous portent for the rest of the raw commodity sector, including the metals. But right now, it looks like this better demand scenario for raw commodity markets worldwide, including the metals and crude oil, is going to be able to propel crude at least sideways, if not sideways to higher here in the near term.
One event many avid precious metals investors are looking forward to next month is the BRICS meeting, which will be held in Johannesburg, South Africa between August 22nd and 24th. During the meeting, the alliance is expected to announce at least 6 new members, including Saudi Arabia, United Arab Emirates, Bahrain, Egypt, and Indonesia. In addition, the old and new members will also be deliberating on the new BRICS currency and the goal of challenging the dollar's dominance. According to several renowned precious metals analysts, the announcement of a gold-backed currency that could be used in oil transactions between Saudi, Bahrain, and Europe, even one that is still being developed, will cause massive upsides in precious metals prices. But Jim Wyckoff feels the announcement of a gold-backed currency will not have the expected impact on gold and silver prices. Here are more clips from the interview.
As we've seen time and time again with Bitcoin and the cryptos and any other so-called challenger to the supremacy of King Dollar, that's all it's ever been as a challenge. It's never been anything significant. The U.S. dollar is always going to be, for the foreseeable future anyway, is going to be the world's benchmark for currency. In times of geopolitical uncertainty, you see people want to own dollars or own U.S. treasuries, which they have to pay U.S. dollars to get. So, the currency markets will look at these new innovations, these new cryptos, and these new other assets. But the health of the U.S. dollar, certainly the U.S. dollar index has been trending lower, but the overall status of the U.S. dollar in the world currency markets has not changed, and it probably will not for anytime soon. I do strongly suspect that it's just going to be one more element the marketplace is going to look at. I doubt it seriously impacts the value of the U.S. dollar or gold at all. The gold market is a huge market. The U.S. dollar, the currency markets are the largest markets in the world. The currency markets are way bigger than the stock markets worldwide. So it takes a pretty significant development to change the trajectory of currency markets. And I don't think the introduction of any new currency-backed asset or gold-backed asset is going to make a big difference in the overall scheme of things for the currency markets.
Several renowned precious metals analysts, from Rick Rule to Andy Schechtman and Lynette Zhang, are optimistic about the BRICS alliance and its goal to reduce the dollar's influence using a gold-backed currency. In various interviews, tweets, and articles, they have discussed how the new currency will impact gold and silver prices in the mid and long term. Jim Wyckoff is one of the few people in the precious metals space that are predicting otherwise. What are your thoughts on his predictions for gold, silver, and the U.S. economy? Do Do you think a gold-backed BRICS currency will cause massive upsides in precious metals? Please share your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more fascinating discussions and analysis on gold, silver, and copper. Thanks for watching.